Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Tesla report for Tuesday, February 20th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's jump to the charts. I'll start with this one. This is how I have been starting the last couple of months. And that is to say, this channel structure that we're trading inside of, that we tested 8 weeks ago, that is now at 253.25, that while testing it 8 weeks ago, we'd mentioned how the channel bottom, that is presently at 170.31 all week, should be considered in reach over the following 3 to 5 months. That took place inside of 2 months. We tested it a couple of weeks ago and have since come off of it. And now we can say, and are saying, that holding above 170.31, you should allow 253.25 over the next several months, 3 to 5 months at the most. I say allow at the earliest stages because, to say that I expect 253.25 is just a bit of a stretch. I need to see a buy signal on strength, a violation of some sort of a trend-defining upper resistance area, and that is, for me, the descending one-third speed line. That is a trend-defining tool I've used for many years in the commodity markets and stock markets. It is based on the July 23 high against that recent low from a couple of weeks ago. 210.39 is, if tested, able to contain at least weekly, quite possibly monthly buying pressures. It's been a 3 to 5 week objective following the testing 2 weeks ago of the 171.40 long-term channel bottom. And so we may see this 210.39 this week. I'll get to that in a moment. And if we do, it is a sell opportunity for those who went long in the lower 170s when tested, actually the mid 170s at that time. If you've been holding a long position up to this point in anticipation of the 210.39 speed line, we've been mentioning how as we were testing this channel bottom, you may consider reaching for 210 or 215 strike out of the money calls, for instance, that don't expire for at least several months. So if you're one of those, this is an area to take at least partial profits. We could push right through here and close above 210.39. And if that does occur, then yes, indeed, that area that I said would be attainable, you should allow for, would then be expected. So if we are over the next, say, few days or the next week or two to close above 210.39, we are then anticipating as an objective the 253.25 channel top. And that could be just within another 3 to 5 weeks, could take the better part of 2 months, but 253.25 would be considered a clear-cut objective that can contain buying on a monthly, possibly quarterly buying pressures. And so, I'm kind of jumping the gun here because I don't expect this today, but I might as well say it now that if we do close above 210.39, you may consider reaching for 245 or 250 strike out of the money calls that don't expire for at least, I would go at least 3 months out on that, maybe 6 months out, just to preserve delta, reduce the theta element, the time decay element from the equation. Until then, testing 210.39, profits can be taken for you 3 to 5 week swing traders who may have bottom picked the low 170s. And in fact, at that point, if you can play both sides of the market, if you like to trade options, you may then consider reaching for 170 strike out of the money puts that don't expire for at least, I would once again go out several months on that, even though I think that the sell-off off of 210.39 back into the low 170s would probably be more in the order of 3 to 5 weeks. And so that is kind of the big picture dynamic that I continue to outline. The numbers change a little bit every day, so they need to be updated on a daily basis if you're using, daily charts. So let's take a look at the day itself. I still have 201.21, this former channel top. I say former because we closed above it on Thursday, and on Friday we pushed through it a bit more and then closed just below it. But it's still, these formations have a knack of holding solid intraday activity and even could contain perhaps daily buying pressures. But I do think it deserves intraday containment. In other words, able to contain buying pressures for a decent part of the day. This assuming, of course, that we open below 201.21. We certainly closed numerically below that point on Friday. So 201.21 able to contain intraday buying pressures, and below which we could fall to 193.83 today, which is an intraday support level. Now, under other circumstances, I might consider this to be a solid day support level, a session containment level, and it may behave that way. A simple trend line off the highs, but it's also, if you were to flip this chart, you would see that there's kind of an inverted head and shoulders thing going on here. You've got, the shoulder, the low is the head, and then you've got a shoulder again. And that this trend line is really a neckline of a 2 to 3 week head and shoulders, inverted head and shoulders structure. So, I'm just kind of mentioning that to give you maybe a little bit boost of confidence that if you want to buy 193.83, I think it's a pretty solid day trade, and it just might contain daily selling pressures. I reserve the session containment levels for pivot points that have repercussions into later week. And so if we were to close below 188.78 today, this newly formed rising channel bottom, that would aggressively pivot the market south through the rest of the week. Until then, 188.78 is your bottom picking territory for those of you who are not only day traders, but 3 to 5 day swing traders, anticipating then bullish rotation back into the 210s and dropping. That would probably be a little bit more than a 3 to 5 day swing. It could be more like the better part of 2 weeks. Buying 188.78 does then allow 210.39 within a week or two. And inversely, if we close today below 188.78, that indicates a good high for the week. And we should, by the end of next week or sooner, retest that 171.40 long-term channel bottom. So if you went long, I guess there's another way of saying this. If you're still long, if you went long a couple of weeks ago when we tested this channel bottom and you're waiting for 210.39, if we close today below 188.78, you may consider bailing on that long position. It's entirely up to you. But what I am saying is if we close below 188.78, we are likely to revisit this channel bottom, which is actually lower in value now than it was 2 weeks ago. So keep that in mind. But until then, holding above 188.78, you may continue holding that long position in anticipation of 210.39. Let's go back to the upside today. This is the wrong upside. There's your 188.78 rising channel bottom. Our pivot point into next week, bottom picking territory for the week itself, could almost be considered a 3-star support level, that you could buy into for the week. We may bump it up later in the week. We'll see. But for right now, this is our pivot point over the 1 to 2 week time frame. So yes, 1 to 2 week swing traders can consider going long at 188.78 if you're not long already in anticipation of 210.39. And inversely, if we close below 188.78, 1 to 2 week swing traders can go short back to 171.40. 201.21 is an intraday pivot point. And if we open above it, we could see strength right out of the gates. We've got 206.27. The question in my mind is, will we actually reach 210.39? And we have plenty of precedent for that on this chart, that kind of volatility. If we open above 201.21, yes, 206.27 is a trouble spot, bound to be some sort of intraday resistance here. But 210.39, not out of the question today, especially if we open clearly above 201.21. 210.39, once again able to contain weekly, possibly monthly buying pressures. And from there, the market's susceptible to falling back into the lower 170s within 3 to 5 weeks. Closing above 210.39, once again, I would anticipate the channel top that is on the weekly chart at 253.25. So let's talk the downside. I'm just going to go over it very briefly, and that is the big picture downside, that in the event, and I don't see this happening this week, there's a couple of things that occurred. One thing that occurred, I'm looking right at this chart, is the fact that We closed above the high of the low week. That is usually a stabilizer, pretty constructive. And so our case that we've been making now for the last few weeks, that once testing the low 170s, you can anticipate the speed line at 210.39 is supported actually by the development last week of closing above the previous week's high, the high of the low. But let me just finish with this. We're pushing 10 minutes. I never like to go over 10 minutes. And that is to say that if all you know what breaks out and we happen to fall significantly this week and close below 170.31, it does need to be by a 1% margin. So if we close this week at 168.60 on Friday at the end of the week, 1% below that critical 170.31 channel bottom, then we have a significant sell signal as we move into the later second quarter. Within 2 to 3 months, I would anticipate this range between 97.87 and 101.81. So if you bought any out of the money calls and you're holding them and we happen to close at 168.60 or lower, I suggest bailing on all of those out of the money calls and in turn reverse and reach for 100 strike out of the money puts that don't expire for at least 6 months. I'm going to leave it at that. Thanks for watching. Please click like, share, subscribe. Check out wickedstocks.com. We offer a 5-day free trial that you will not regret. And if you happen to regret it, you can always bail out on your 5th day at no cost to you whatsoever. I'll be back tomorrow with Wednesday's Tesla.